Hi, this is Dustin with Dustin's Dollars. Today I'm talking again about Knightscope. I'm going to be sharing sort of a real simple model for projecting when Knightscope could finally post a a gross profit rather than a gross loss. And I'm going to walk through model today. I don't have any specific insight. You might have your own model. So, if you're not really interested in that, feel free to, hop off. But this is kind of the way that I am thinking about it and looking at it. And so I'd appreciate, anyone else's feedback, right? If you're here live, that'd be cool. If not, feel free to comment down below in the comments, you know, how you think things might go, where you think I have bad assumptions or what you use in your models. So that's what I'm going to be talking about today. So before I begin, let me remind you that I am not a financial advisor or a financial professional of any sort. All opinions that I express in this video are mine and do not represent those of any company or any other individual. I do currently have a long position in Knightscope. I hold some Series S preferred shares and some common Class A's. Class A common stock, I guess you call it. So basically, this video should be for your entertainment purposes only, because I could be wrong about everything I say in this video. You need to do your own research before making any investment decisions. And I will especially emphasize that today because I am, not a financial analyst. I don't have any specific, insider information. I'm just going to be talking about how I kind of have modeled this out and am thinking about it. So, as we all know, anybody who's dug into the numbers on Knightscope, they are not even gross profitable, right? They're posting a gross loss quarter over quarter. They still did even in Q4 of 2021. I have a whole video from a month or two ago about sort of the components that go into their cost of revenue and which parts of those I think are sort of fixed and variable and how I think that could change over time. But today I'm going to be actually looking at the numbers and sort of sharing my simple model on when I think that could cross over. And I'm also going to be talking a bit about what that could mean, that in also a projection for some of their operating expenses over the next, let's say, roughly 2 years, and what that could mean in terms of how much dilution they have with that recently announced equity facility. So, as you see here in their 10K, maybe that might be too small. I'll make it a little bigger. Oh, not that big because it lost where it was. So, they had $3.4 million of revenue, and their cost of that revenue was $5.5 million. And it's a bit funny. It's accounting because, not all of that is actually cash out the door. A lot of that, some of that's depreciation, which is a very real expense. But, per the accounting, that was a gross loss of $2 million for the year. And, they've never posted a gross profit that I'm aware of, over the history of the company. And this is also, with the backdrop of operating expenses that have been growing and growing and growing. So how am I modeling this out, right? Why do I think the company's ever going to make money, right? Because that paints a pretty bleak picture. This does go back to, you see their investor presentation, sort of the unit economics that they talk about. And some of this makes, a ton of sense in terms of how they're going to lose money up front. They're going to get, higher margins on the back end if the clients renew. And, I think that has been a point of failure for the company. I think they haven't had clients renewing, and you can, again, talk about in the past. Some of that may have been due to the pandemic. Some of it was probably not. But the model that I have is I grabbed all their numbers from that I could get from their prior filings from 2020 all the way through to the end of 2021. And that's what you see here. And I have some charts but I can zoom in to make this maybe a little more readable for you. So I have the quarterly numbers, and then everything from 3/31/22 for that quarter onwards in the future is obviously a projection. And what I did here was I sort of filled in some numbers for how I think their growth in the number of machines could be. And I have just a fixed value of about, this was taken from the average, I think, of their most recent quarter, $15,350 in revenue per machine. And I filled in a number here of roughly 80 machines, or so maybe I actually got that number from one of these most recent quarters. I can't remember. It divided out here, and that's in the ballpark of what they said before. That comes out to, just a tad over $60,000 per year, which I think is roughly their, right at like $60,000 here per year. Maybe I should have used this number, although it is a little fuzzy because they have some of these additional revenue in year one. This is just what I'm using here as kind of an average, and so I'm just multiplying this number of machines by that number to get their revenue, and then I am assuming I know that their most recent quarter, their gross margin actually, and I've gone over this, actually got worse, right? They were at, before in the first half of 2021, they were at negative roughly 42%. Then in Q3, they were at negative 67%. And in Q4, they were at about negative 94%. So their gross margin is even getting worse. But I think the way that I'm modeling this, and I've already talked about this, I think they are returning to growth. And I'm optimistic that we're going to see that in their Q1 numbers that come out. And what I'm using is I'm using, they say that, excuse me, they say that they think they can get a 57% margins over time, as you average all of this out and you get renewals. And I think that's reasonable. Like the numbers kind of make sense to me. Obviously, I don't have specific insight into their business, but to use in a model, I actually just use 50%, not the 57%. But I assume that each incremental dollar of revenue that they get would be at a 50% margin. So, right now we know that their margin was negative 93, 94%, but that for all the incremental revenue between Q4 and Q1, I'm assuming that the cost of revenue for that incremental revenue is half of it, right? And so that's how you see here that their gross margins are still negative. I'm not assuming immediately that they're going to hit 50%, 50% gross margins on, overall, but I am assuming that their incremental revenue is at 50% margins. And again, this is probably the biggest assumption that I make here. And I mean, the other one is also their growth trajectory. And again, feel free to roast me in the comments if you think that either one of these are, super optimistic and completely unrealistic. Actually, I'll talk about the growth numbers for a minute. I actually think this is semi-realistic. Obviously, it assumes some positive outcomes for the company. I think Q1 is sort of a shoo-in the sense that they already said they had 90 robots deployed in January. So to think that they would end with 95 deployed is not so crazy. And then they even reported, right, I covered this, that they have their sales backlog reported as of, March 18th of 1.7 million. And if you divide that out, that could be, roughly 28, 29 robots. So if you figure they're at, they were at 90 something robots, they had a backlog of like 29 more robots, that just by itself gets you 125 if they can just get through that backlog by the end of the year. And then I sort of figured they're going to make more sales because we've obviously already seen evidence that they can make sales because they've, they grew that backlog in Q1. So, I'm assuming here that they start with 95, or that they ended Q1. So right about now they were at 95 deployed, that they're going to get the 115, 140, and then 170, for each quarter by the end of the year. And again, for that incremental, I'm just multiplying by this 15,350, quarterly revenue per robot. That's an average. That's how the revenue would then in turn grow, and that they're again getting incremental margins of 50% for that incremental revenue, quarter over quarter that they grow. And that's how I get to these, these numbers and these gross margins. And, if you look at this, they get to almost break even by the end of 2022. And then in the first quarter of 2023, they do post a gross profit. And their overall gross margins get to, about 8%. And, if I project this forward a couple more quarters and I look at, I assume that growth sort of picks up even further, then you get, to the point where actually quarter over quarter, they're selling 45 more robots by the end of 2024. But by the beginning of 2024 and Q1 of 2024, then you actually start to see their margins come closer and closer to that, 50% number. I mean, as you'd expect, because that's what the math is that I'm doing in a chart. That might be more easier to digest here, maybe easier to see. Let me make this a bit larger. This is what those projections kind of look like, right? The x-axis here is time. Obviously, you have the quarterly numbers. The blue line is the revenue, and the red line is the cost of revenue. And so you see, right now their cost of revenue is above their revenue, meaning they're losing money. And that's the difference between those two is represented by the yellow bars, the gross profit. And you see that as negative until, again, like I said, around the first quarter of 2023 is where, at least in this model, it crosses over and they start to post a gross profit. And you see that just go, in this model kind of straight up, if you will. But I mean, that's how models work, right? That's how things would shake out with these assumptions. see anybody on the chat. Oh, no feedback yet. So that's my best projection. Again, not a financial analyst. Make your own assumptions, do your own due diligence, do your own research. But that's sort of where I see them finally posting a gross profit. And again, that gross profit is, that's like table stakes for a company, right? They're still going to be losing money at that point, I assume, because of their operating expenses. And I also modeled out their operating expenses. This would be easier to look at it in the chart. Let me grab that here. And this is what I also modeled out for their operating expenses. Talk about this a little bit yesterday, where you had the three components here, and we've seen historically the sales and marketing was the one that was huge, although we saw that they actually bounced way down in Q3 of 2021. Again, I've covered this. I think that huge difference was how much they were spending on advertising. Again, the advertising was largely, in my opinion, and the company has sort of said this, but not completely, so I'm a little bit putting words in their mouth, but I think a lot of that was, again, targeting investors. And I see that actually, or I'm hoping, crossing my fingers, that expense is going to largely go away, because they are going to be focusing their time just more on direct sales. And so I do see their sales and marketing expenses increasing slightly over time, but not nearly, to that amount, to the point where, they showed about $700,000 of expenses, sales and marketing in Q3 of 2021. And I think, I'm modeling this as that they get back to, 900,000, 1 million, and that grows, to about 1.6 million by, the end of 2023, beginning of 2024. The blue here is their R&D, and I am assuming that that's going to tick upwards and keep going, up. I do have, they spent, for the most recent numbers, they spent about 1.7 million. I am assuming that goes to 2 million in Q1 of this year, and then by the end of this year, by Q4, that's at 2.6 million. That even grows to about 3.4 million in my my projections here. Sorry, I keep saying projections. Maybe I should just call them made up numbers, because I don't have specific insight into this. My assumption for that, though, is that they've stated their intent to open an office in Washington, D.C. They just hired, I think, a director of robotics. Sorry, I can't remember the exact title, right? But they hired him to, I think, to work in Washington, D.C. and maybe bootstrap that office. And so I see R&D expenses increasing because I see them investing more in that. And you look at their job postings, and maybe that's something just to, let's get that /careers. You can see they're hiring folks, right? They're hiring more engineers. They're hiring robotics software engineer, senior robotics engineer, SLAM engineer, senior machine learning engineer. They're hiring audio systems engineer, video systems engineer, right? So they've got, I would guess all of those would come under R&D expenses, right? And so that's, I see those expenses going up. And for G&A, I kind of figure they're going to have a bump, at least in the short term, as they are hiring, I think they still have them on here, some accountants, right? They're a public company. They're going to have to do more. They state that in their filings. They're hiring an in-house accounting team. See those expenses going up, but then not going to the moon, right? Like not going crazy. So I think I can go to the numbers. It'll show me when I mouse over. So 2 million for Q1 of 2022. And not growing too much throughout this year, and then bumping up to 2.4 and ending in my model, I guess, at 2.4, right? So I didn't assume that the G&A is going to go up too quickly, but that they would have at least a bump in the very short term as they are growing, into some of their responsibilities as a publicly traded company. So what does that look like if then I should go towards my assumptions that they would actually then be issuing some of that, some new equity under that announcement that was just made yesterday. And, this is where I think maybe it takes more of a leap of faith that management would not issue very much in the short term until they have shown some growth. The share price does go, hopefully up, right? I'm hoping the share price goes up, that they would issue nothing in Q1 or Q2, and that maybe by Q3 they could hit an average of, and again, I'm having what I think are conservative numbers, but you can have your own opinion here in terms of, I think by Q3 to have a $7 share price that they can issue equity at is hopefully reasonable right at once they start showing some growth. And then I just sort of went at quarter by quarter, 7, 8, 9, 10, 11, I guess I didn't go up. I was doing this back because I think it's going to be hard to break past that $10 point. Um, just because sort of the valuation of the company that you get at that point, the price of sales that you have. Um, and I think it's anchored in a lot of people's minds because that was the listing price. But so if I look at this and I figure they're probably going to start, actually selling some of that as their cash balance gets lower and lower and they get down to, I think by the end of, once they're getting close to that $10 million mark, I think they're, or at least below 15 million, they're going to want to start utilizing this to get some cash on the books. That's my assumption. Again, I have no idea how management's actually going to use it. What just happened? Sorry, I think my optical mouse jumped all around. Didn't like that. All right, I'm back. So yeah, still on. And so I'm assuming that they're going to issue $5.5, $6 million, quarter over quarter, as that's starting in Q3 of this year. And that they're going to issue, use that new funding source, and that over time they're going to probably ramp that up near the end of those 2 years as they, hopefully the share price for the stock is up. And I kind of assume also that they're going to stick at $10 as they start to issue more and more of the equity, because it's going to get presumably dumped on the market and, provide some sort of downward, so some selling pressure for the stock so that it doesn't rise too quickly. So that's, again, who knows? I could be way off on this. Again, do your own research. I just want to share this. So, please let me know in the comments what you think. That's how I see this playing out. This line here, I guess I could go through the last little bits here that I have in my model. Shows what the cash balance will be at the end of that quarter. And so, sort of under all of these assumptions here, I think they would end 2024, sorry, Q1 of 2024. They'd want to utilize this as much as possible near the end of that 2-year window, and they'd try to get their cash balance up high. I think this is probably the limit of what they could issue there, and so they'd hit roughly, back to a $31 million cash balance by the end of that quarter, which would give them some runway as they hopefully can grow sales further and start to get to the point where this, gross profit does start to largely offset the loss from the operating expenses, and then finally turn a net profit, get us some positive net income. So again, there's so many wild cards, and I feel almost a little bit ridiculous to try to project out 2 years for this company because there are so many unknowns, but we'll see, right? And I still, yeah, there's a lot to go off of here. Again, let me know what you think in the comments. This is a graph showing some of that overall loss from operations, right? This is even when they become gross profitable, they're still losing money. And that doesn't actually cross over. And I don't even think in this model by the end of 2024 sorry, it doesn't cross over. I guess as soon as they start having a positive gross profit, right, that does actually start to take away a little bit from that that OpEx and offset it a little bit. But I think, the question is actually going to be a bit of, obviously it's how quickly can they grow sales? Can they actually achieve this 50% incremental margins on that additional revenue? And then how quickly are they going to increase their spend on OpEx, right? And I think we'll see. Hopefully management is able to control expenses and at least match them with sort of the future sales that they are expecting to get. All right, nothing on the live chat. Again, just for anybody who stuck around this long, I do these streams usually 9 or 10. I guess today was a tad bit after 10 p.m. Eastern US time. I'd love to have anybody in the chat, love to chat on there, get some back and forth going. And yeah, I think that's it for today. Thanks for watching. Have a good one.